Hi, welcome back to the channel. This episode, I want us to have a look at Amazon. Amazon. Amazon just finalized a deal, of acquisition of MGM, which is the second acquisition in the last 5 years. I think the last acquisition they did was 13.7 billion in 2017. That was when they bought Whole Food. I have the details for the MGM here. Let's dissect it. Amazon has been, about 10 days ago or a week ago, Amazon announced that it would do stock split, and Amazon also said it would do buyback of 10 billion. And I can tell you that the market is on, the market is open. Amazon is actually above 3,000 as I speak. We would look at the stock price. We will look at the balance sheet to details, and we will look at we will dissect this information that I received on Amazon acquisition of MGM. I think he's going to include the likes of James Bond movies, the Pink Panthers, and this might just be the game changer, for Amazon Prime and all that. This is going to be the game changer. Let's have a look at it. Let's have a look at the details. Before we look deep into Amazon acquisition details, let's have a look at the balance sheet. Let's have a look at the free cash flow. Let's have a look at the chart. Let's look at price action. Let's see if there's any technical details, technical information we can get. And then we look deep down into the acquisition of the MGM. The acquisition, I would say the word acquisition is actually inappropriate for this context. I would say a merger. Merger is actually better. Amazon is the fourth company in MGM 97-year history to merge with it because they have a distribution channel that needs filing. It was the reason MGM was founded. You see, Amazon already has a channel, so it's easy for them to allow their client to stream and to pass it down to their customers. While in this industry, content is the key. That is why the likes of Netflix spend a lot of money to create local content for themselves. In different regions, and Amazon is doing the same. But with this, Amazon will have a leverage. Will be able to stream these movies. Part of this merger acquisition, whatever. Amazon is not getting most films with MGM in print. Most of the 4,000 titles they acquired were produced by other companies. These are movies like James Bond, Pink Panther, Rocky Balboa, and other old movies like that. This should be viewed as a defensive move and a good one at that. It's defensive for MGM and it's profit. And it's also good for Amazon. They have content, ready-made content to stream. It will not have much effect on Amazon, yeah, but this is their own view, which is about retail, AWS, and not and now advertising. But it helps keep Prime. Anyway, let's move on to this. And here you can see physical, global, theatrical, and home/mobile entertainment market in the US. The year 2020 was profitable for digital. Physical is in decline. Theatrical in 2019, you can see theatrical is 42.3 billion, while digital is 47. But the year 2020 that we were in lockdown, you can see as digital because everybody was at home. So, there was no movement and all that. Um, for Amazon, from their car, you see, if you want my opinion, this is an analyst from, Seeking Alpha, White Chart. Amazon paid too much for MGM for many decades. But the truth is that Amazon is paying a lot of money to create content, and creating content isn't that easy. This is the challenge Netflix is facing. Now they're talking about people sharing password. People that live in Nigeria, like myself, I know a lot of people share their password, but then we'll see how Netflix will get into that. 67.21 billion. Let's move on to here is the US record music revenue by format, different sectors in the entertainment industry, music industry. You can have a look at this, from paid subscription, different. Now, here, recording Summary Association of American Sales Database. 2020 was the best year for recording industry since 2004, but this most likely will never happen in videos for two reasons. Piracy. Piracy was never a big problem for film and TV shows. The studio have not been desperate like the labels. Now, yeah, I mean, studios like Disney, they prefer they prefer to have control over their own content. I mean, but music videos, do they care about their own content? Once it's out, it's out. It's different. It's actually a different line of business. So now Disney, ABC, Disney, uh, Disney, ABC has Disney, Comcast, Universal, NBC, and as Peacock. You know, these are all the guys in the industry: Viacom, Discovery, HBO Max. So here is the details for Amazon, the fundamental information. Amazon market cap is 1.6 trillion. Um, Amazon is traded under Nasdaq. The PE ratio is 49.78. The forwarded PE 1 year is 58.64. The earnings per share is $64.78. Um, the 52 weeks high is 3,773, and the 52 weeks low is 2,671. And I think that was achieved recently, um, in the correction. But then, um, let's have a let's have a look at the financials for Amazon. Under the financial, we'll see the income statement, the balance sheet, and also the cash flow. So here is the income statement starting from 2018. As you can see, 2018, Amazon total revenue is 232 billion. Let's say 233 billion. The following year is 280 billion. That's about, almost 30% growth. Um, 2020, this is almost about 45 to within 40 or 45%, because here is 386 billion from 280 billion. But this was part of the lockdown effect, which Amazon did extremely well during the lockdown. People were at home buying stuff, buying a lot of household items and all that. And presently, 469, let's say 470 billion, that is 2021. I mean, the recent earnings that was declared, the total revenue was 469 billion. But what you should also have a look at is the cost of revenue. The cost of revenue, of course, is also increasing, growing, not even with small, percentage, but compared to their total revenue. Now look at the gross profit. The gross profit, when you subtract this from this, you get the gross profit. And then sales and general admin, you can look down the operating income, before tax, after tax. What you should also notice there is net income, which is 33 billion. 33 billion. Now let's have a look at the balance sheet. On the balance sheet, I like to see the total liability. To see what is what's their liability. Um, on the balance sheet, as you can see here, you can see cash and cash equivalents. They have about 36 billion. Net receivable is 30, almost 33. Inventory 32. Total current asset 161. Now, my interest is their total liability. The total liability is 282 billion. 282 billion. Now, let's have a look at their cash flow, free cash flow. On this statement is it's written net cash flow. That's after all deductions. Now here you see net income, which we saw earlier, is 33 billion. Depreciation, net income adjustment, account receivables, different deductions, different expenses and all that. Um, Net cash flow here is negative, stated here as negative, negative 6 billion. What does that mean? Well, the fact that it's negative doesn't mean that Amazon does not is not making money. So Amazon, one way or the other, it says here net cash flow, which is negative. Companies, can hold here. Have a look at this. The previous year is actually five, almost 6 billion, and here we have almost 6 billion in negative. Okay, this might just be a subtraction, one way, but it doesn't mean Amazon does not have any cash flow at all. Let's have a look. Let's have a look back here. Account receivable. Let's go back on the income statement. On the income statement here, you see net income 33 billion. This same net income is what you see here. Net income 33 billion. Now let's move on to the price action on the technical chart. Then we'll also look at the details of the acquisition on the of the MGM. So we are looking at a daily chart for Amazon. This is a technical chart. Let's start by drawing this resistance line that I can see. And it appears that it is holding the resistance line. I mean, the last couple of days we have seen a very big rally, which actually produced about 3 strong bullish candles for Amazon. And in fact, it looked like a V-shaped recovery. Let me draw what I can see here. Okay, it was like in channel trending down here. Amazon has gained, over 15% within the last few days. As you can see, this actually looks like a V-shaped recovery for Amazon. Here, then here, like that. This is a bullish, a strong bullish reversal trend. Let's have a look at it on a weekly chart. Okay, I already do this on a weekly chart. As you can see, yeah, this is an hammer. Let me remove this line so you can see it well. This is a bullish reversal, and this is a strong bullish candle, a weekly strong bullish candle, which we see. It is under the resistance here, and the 20-day moving average is standing here as resistance. Meaning, let's see if I put this here. This is, yeah. So that's a resistance. I mean, it is a support that turns resistance on a weekly chart. Yeah, but let's go on back to daily chart. It's more on the daily chart. We are trading above 20-day moving average, and we are trading above 50-day moving average. So this is a strong bullish trend, a strong bullish trend for Amazon. Guys, we have seen, the details of Amazon acquisition. We have seen the balance sheet. We have also looked at the technical details. I'm waiting for the stock split. In the meantime, the Amazon price is up. I mean, the stock price is up. Do your valuation. Be sure this is good for your portfolio before you make purchase of Amazon shares. Whether you buy it now or after the split, is the same thing. So if you want to buy it now, do your valuation and get it. Don't wait till when it's split. It is the same thing. Thank you for following up on this channel. Thank you for subscribing. We will continue to produce content that will support your investment journey. Thank you.